Hello and welcome to this weekly market recap for the week ending Wednesday, October the 8th, 2025. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it is a pleasure to be with all of you again this week. Another solid week of market action. We continue to see the indices move higher. This time it's in spite of a government shutdown. Doesn't seem to matter. I think in time it could matter, but for now, market just seems to have its collective head down and just keeps pushing to the upside, which has been great for stocks. Also, in addition to looking at this last week during the government shutdown, I also want to kind of go back and take a look at what's been working and what hasn't been working over the course of the last 3 weeks, which was when we had the lower interest rates from the Fed. So we had that Fed funds rate cut about 3 weeks ago. So I'm going to look at some charts just to show you what's been working, what hasn't been working, and maybe why some of your trades are doing well while others may just be languishing. Anyhow, let's go ahead and take a look at what the market has done over the course of the last week. Russell 2000 leading the action, gaining about 1.75%. NASDAQ 100 also up nicely, up about 1.1%. The other four groups, major indices, all higher, but all higher by less than 1%. So clearly, over the last week, since the government shut down, we're seeing strength in the small cap area and in the NASDAQ 100. Moving on to the sectors again over the last week, utilities and technology. Check out utilities gaining 3% last week, technology 2.13%, and then we had materials, industrials, and healthcare. All three of those groups outperforming the S&P 500. And then down below the S&P 500, you can see the areas that did not perform well over the last week. And I think it's noteworthy to kind of look and see the two consumer areas. Consumer discretionary, the worst area of the market over the last week. Consumer staples, the other area. There have been some folks saying that the government shutdown is likely to have a drag on GDP. Of course, consumer spending makes up 2/3 of GDP. Don't know if that's why we're seeing some of that rotation away from those areas, but just wanted to point out right now, consumer stocks not doing particularly well. Let's take a look at the charts. And on these charts, I want to show you down at the bottom, and I'll get to it in just a second, but I'm going to show you the rate of change over the last 20. Actually, I think I probably should. Yeah, 21. That's going to be the last month. I think maybe better off would be to change this. And I'm going to change that to 15 days because that'll give us the last 3 weeks. So we'll go through and look at all the major indices over the last 3 weeks. I just want to kind of go through those with you and point out what's been working and what has not been working. So S&P 500, another 100-point interval taken out, no problem. 6,700. We had never closed there before prior to this past week. Now we've closed over 6,700, and now we're looking up at 6,800. That will be our next target to try to get above on the S&P 500. If we scroll down, you can see over the last 15 days, and again, these are trading days, so this is going to be 3 weeks. This takes us all the way back to when the Fed cut interest rates. So it just tells us how the market has been doing since that time. Rate of change on the S&P 500, up 2.32%. So let's take a look at the couple of the other key indices. First, the NASDAQ 100, again, breaking out above 25,000, first time in history. So another big, psychological level taken out on the NASDAQ 100. If you look, the last 15 days or 3 weeks, NASDAQ showing leadership, up 3.77%. That's a good thing because it's showing us that money is rotating into more more growth-oriented area like the NASDAQ 100. And then finally, let's pull up the IWM, small caps. Let's see what's going on there. Over the last 3 weeks, the small caps and the NASDAQ 100 both gaining more than 3%, while the S&P 500 is just slightly below that level. So we're seeing not just what we saw this past week, but really for the last 3 weeks, we've continued to see strength in both the NASDAQ 100 and the small caps on a relative basis. Taking that same logic to the sectors, let's check this out. So I'm going to change this again. That was 21 days. I want to look, see what's going on over the last 15. So XLK breaking out to a new high over the last 3 weeks. XLK gaining 7.25%. Now remember, we just looked at the S&P, which was between 2 and 3%. The NASDAQ 100, which was under 4%. I think it was like 3.7%. XLK technology gaining almost 7.25%. So a lot of relative strength continuing in technology. And this is the time of the year when technology actually takes a little bit of a back seat. That has not been the case with the lower rates and the potentially stronger economy ahead. A lot of folks putting their money in technology stocks. How about discretionary? We said discretionary has been a little bit off over the last week. What about the last 3 weeks? Well, check that out, minus 2%. So this is an area where we're seeing money rotate away from. So if you're in a lot of the areas of consumer discretionary recently, you might be finding it a little bit more difficult to make money. It's because a lot of that money is rotating into technology. All right, XLC, this is the time of the year when communication services doesn't do very well. And check that out, minus 2.4% over the last few weeks. So it does seem to be more of a historical thing, maybe because of the rate cut. Again, with more and more money going into technology, that money has to be coming from somewhere. Right now, it's coming from discretionary, and it's also coming from communication services. How about financials? Financials down just a little less than 1% over the last 3 weeks. And then industrials, these are our 5 aggressive groups. Industrials have gained 3.37%. So we're seeing money rotate more toward technology and then also the industrials as well. Let's move on to defensive sectors. Start with healthcare. Healthcare's had a pretty big pop of late, gaining almost 6% over the last 3 weeks. So money definitely seeing a little bit more strength in healthcare. So that's an area that you might want to consider for some trades, at least as long as that relative strength continues. Staples, we said consumer discretionary not doing well. Well, consumer staples not doing very well either, losing more than 2%, actually underperforming the more aggressive discretionary area over the last 3 weeks. How about real estate? Another defensive area, down about 1%, 0.94% over the last 3 weeks. And then we've got utilities, and utilities up over 8%. Utilities actually performing even better than technology. Now, I believe, and I'm about to confirm this, but I think that it is in conventional electricity where we're seeing most of that strength. Yeah, this group is up more than 9%. So this is a leading area within utilities, which is a leading sector. So right now, conventional electricity, you can see, been going up almost every single day. If you're a trader, you need to be aware of this. You need to see where that money is rotating. All right, couple more sectors. Let's check out the XLB, which is materials. Materials down 0.6%, and energy, which has been relatively flat, down 0.29%. So most of the strength that we're seeing, at least over the course of the last 3 weeks, has been utilities number 1, technology number 2, healthcare number 3, and industrials number 4. So those are the 4 areas that are showing a lot of short-term relative strength. That's where you're going to find some of your best trades right now. All right, within technology, what I wanted to do was do kind of the same exercise. What's going on within technology as far as these areas go? I'm going to change that rate of change to 15 days again. Semiconductors making their first close ever above 28,000 on the Dow Jones US Semiconductor Index. That's the $DJ USSC. If we scroll down here, look at the group gaining more than 10% over the last 3 weeks. A lot of relative strength in semiconductors these past few weeks. We've seen many of the semiconductor equipment companies, KLA Corp, Applied Materials, Lam Research, all surging to the upside. Of course, Advanced Micro Devices with the OpenAI investment, all that news that came out recently. We've seen AMD surge in a big way to the upside. All of that is contributing to a very strong semiconductor group right now. All right, let's keep moving on. How about software over the last 3 weeks? Gaining about 2.25%. So semiconductors up 10%, software only 2.25%. So not seeing the same strength there. How about in the electrical or electronic equipment area? That's up 6%. Pretty strong area there. How about electrical components? Gaining about 3.5%. So on a relative basis, those two areas have not been leading technology, but still going higher. How about computer hardware? This is a group that started to regain strength. Here you can see over the last 3 weeks, the group up 8.25%. It is one of the areas now that is leading to the upside. You can see this huge move. It just continues to push higher. We have taken out the December 2024 high. So we're getting a lot of renewed interest in computer hardware stocks. How about telecom equipment? Another big day today for telecom equipment. That rate of change over the last 3 weeks, almost 6.75%. So great action there. And then finally, let's take a look at the renewable energy space, which has been on fire, gaining almost 10% over the last 15 trading days. So that's giving you kind of a sign of what's going on in the market, where the leadership is, breaking down that leadership within technology. This is really important as a trader to know where that money is going and make sure you're riding the hottest stocks in the hottest industry groups within the hottest sectors. Now, one word of caution, well, a couple words of caution. Number one, sentiment has been showing potential topping signs for probably the last few weeks. The problem is, in a secular bull market, you get a lot of potential topping signs and many of them don't work. And so it gets very frustrating if you're trying to bet against a secular bull market. I wouldn't do that. I would use these signals as signals of caution. So maybe if you're normally trading in margin, I would probably back off of that. If you're trading a lot of options or leveraged ETFs, maybe kind of reel that in a little bit. I would be careful until we get, maybe down to a key area of support, like a moving average, that sort of thing. Maybe instead of individual stocks, more ETFs. There's a lot of different ways that you can be a little bit more cautious. If you own stocks and you've got a lot of profits in them, think about covered calls, where you can sell calls against your position. If the stocks pull back, you simply just collect that option premium. That's a great way to protect yourself a little bit to the downside. It's not full protection. It's just protecting you in the event that we see a little bit of a short-term pullback. All right, on this chart, this is one technical thing that I wanted to point out, because if you recall, when I called the market top back in February, one of the things I wrote about was 2 days after the market topped, I said that the top was confirmed. And one of the key thing that I looked at was massive rotation out of discretionary stocks and into staple stocks. I don't know if you recall, but you should go back. It was a February 23rd article that I wrote. That was on a Sunday, and it was dealing with the action that took place on Friday, February 21st. But on that day, we saw a massive drop all day long in discretionary stocks and a huge rally all day long in staple stocks. That is very unusual and sometimes can mark tops. Or what I've said is the last 10, the most rotation, the 10 biggest days of rotation over the last 16 years between the XLY and the XLP, all 10 of those biggest days of rotation occurred during bear markets. 9 of the 10 occurred during bear markets. 1 occurred during a correction, but they don't just happen out of the blue. Now, having said that, this was not that significant of rotation, but it was bearish rotation. And so I wanted to point it out. XLY, Look at the selling that took place. This was on Tuesday. XLY was selling off all day long. XLP, after being down in the morning, was being bought most of the day. Now, the good news is that prior to that happening, the XLY outperformed the XLP. And on Wednesday, since that happened, again, we had the XLY going up most of the day and the XLP going down. So it looks like it was just an anomaly. It was just one day. But these are the types of things that raise the hair on the back of my neck. When I'm looking at the market and I see that kind of rotation, again, it wasn't nearly as significant as we saw back on Friday, February 21st. But anytime I see aggressive areas being sold all day long and defensive areas being bought all day long, it starts to make me take notice and continue to monitor to make sure that situation doesn't get worse, which in this case it did not. So that's good news. All right, quick little break here. First, just want to introduce you, if you are new, to EarningsBeats.com. This is my home. This is where I live throughout the day. If you would like to start a no-cost trial, 30-day trial, you can click on this. There was a bonus that we provided to our members earlier this week. We provided them 10 stocks that I believe, are set up to potentially have a massive pre-earnings run to the upside. Anytime we go into the first calendar month of a quarter, that's when we can start to see some big pre-earnings moves. Earnings are what drives the stock market. Many times you'll get companies that show, it's a buy on rumor kind of a thing, where these stocks make big moves prior to releasing their earnings. I'm going to show you 2 of those 10 in a minute. But if you want all 10, simply try us for 30 days. We'll make sure that'll get out to you. All you have to do is start a no-cost trial. You'll get that. Also, want to just point out that if you just want to try us, our free newsletter, no credit card required. This comes out every Monday and Wednesday. Name and email address, that's all it takes. You can literally join tens of thousands of folks that have joined us on this free newsletter. All right, on your screen now, if you're on your mobile device, there will be a QR code, and you can simply scan that QR code. It'll take you to a landing page where you can sign up for this EB Digest. Beginning of the week, I gave out 10 stocks that I think are poised to make big pre-earnings moves. One of the 10 was Netflix. I just want you to look at what was going on here. So I'm going to annotate this chart, and I want to show you that we had a false breakdown 1 week ago on Netflix, where it looked like folks, looked like we were breaking down, taking out the low from early August. So it looked like maybe we're going to have another leg to the downside. Look at the volume pickup over here. Whenever you get a false breakdown like this, it can be a signal of market makers accumulating shares for institutional clients. Having this happen 2 weeks before earnings, to me, was a little fishy. I thought, hey, I think maybe we're ready for a potential move to the upside, and look at what has happened now for Netflix. So I think we are in the process of making a pre-earnings run. The other thing I find really interesting is that most of the weakness that we saw to get us down to that early August low was gap downs. Look at the gaps. We actually saw a lot of buying throughout the day, and that resulted in the AD line breaking out to new highs while we were testing 3-month lows in price. I think all of these are signals that we've got folks getting into Netflix, and I would not be surprised to see this rally continue. Next up, SOFI Technologies. Again, look at this, coming down for 2 weeks or so, testing that 50-day moving average. AD line remaining very strong here. This is what I liked. I love that 50-day test. We have moved back up this week on SOFI, and this is just 2 of the 10. Some of the others just starting to move. There are a few that still are sitting exactly where they were at the beginning of the week. But for the most part, this has been a great list. All right, final thing I wanted to do today. This is a chart list that we provide to our members every single week. If you are a momentum trader, you have got to check out this chart list. This is the leading stocks in leading industries group. I mentioned earlier, computer hardware, we're starting to regain strength. Look at the best performers on this list over the course of the past week. Rigetti Computing, computer hardware stock. D-Wave Quantum Inc., computer hardware stock. And this IonQ Inc., computer hardware stock. This stock I provided to our members last week on a 20-day test. I want you to take a look at this chart. I'm going to pull it up for you. 20-day test occurred when this stock was in the low 60s. Literally within 3 days, it was back at its 52-week high at 75. Folks, from 60 to 75, that's a 25% move in 3 days. These are the kinds of moves that absolutely power a trading portfolio to the upside. Now, we did make that break. We pulled back, but I believe the stock is probably setting up for an even bigger move to the upside. But this is just one. And this was, what, maybe about the 12th best stock on this list. There have been some huge moves on these leading stocks and leading industry group chart lists over the past several weeks. We started sending this out. I don't know, it's probably been a few months now. This goes out every single week to our members, and it's giving you the leading stocks, literally the best performing, the best relative performers within some of the best areas of the stock market. The way I select these stocks is by going through and finding the best industry groups. And then within those industry groups, I look for the best relative performers. So all of them are handed out to our members at the start of every single week. And I think there were 73 stocks in here. So just imagine being handed at the start of every week 73 or 50 or 90 or whatever it is of the best stocks in the market to start your trading week. It's really important from a trading perspective. Anyway, that's it for me. We'll see how long this shutdown goes on. The government shutdown, I think right now the market still holding up well. I do think the longer it goes, the more weakness we might see. So let's, be prepared, be nimble, but at the same time, let's recognize we're in the midst of a really strong secular bull market. Have a great rest of your week, everybody, and I'll see you next week. Happy trading.